It's long-term what?
Okay, let's get started. People sometimes make self-inflicted mistakes, like Jimmy Fallon cracking an egg on his own head. Or when Coca-Cola introduced New Coke in 1985 and the public said, "No thanks."
For years, introducing the new taste of Coca-Cola.
After a giant public backlash, the company quickly brought back the classic formula. Crisis averted. When long-term care insurance was first introduced in the 1960s, the industry made its own share of self-inflicted mistakes. Insurers miscalculated the costs, which led to big premium hikes and frustrated customers. But they've staged a big comeback with consumer protections, better pricing, and improved policies. Today, I'll quickly explore what went wrong and how things have improved. First, here's a super abbreviated history of long-term care insurance.
You're welcome!
In the 1960s, the first policies appeared and only covered nursing home care. By the 1980s, we had big hair and over 100 companies selling long-term care insurance. But none of these aged well. These policies were priced way too low. Why? Well, there was a lack of data to predict future care costs. Customers renewed their annual coverage more often than expected, and interest rates, they fell hard. See, insurers collect premiums and invest that money. But when interest rates dropped in the 80s and 90s, those investments didn't grow like they expected. These problems resulted in insurers charging too little. And over time, this self-inflicted wound would come back to haunt them. Over the next decade, regulations were introduced to make policies more consumer-friendly. They had to cover Alzheimer's, and they spelled out exactly when benefits would kick in. No more guesswork. Many policies became tax-deductible, which helped make coverage more affordable. In the 2000s, insurers realized that they messed up. Some stopped selling new policies, and others raised annual rates on existing policies to make up for their earlier mispricings.
The actual retail price is $1,040, and you win, Lauren.
This caused a lot of customer frustration, and rightfully so.
I'm not happy!
That said, prices have gone up because people were getting such a good deal for so long. These price increases have caused reputational damage to the industry. If you've only seen the headlines about rising premiums, you might think insurance isn't worth it, but you'd be missing the bigger story. Long-term care insurance policies have improved. That bad-tasting soda, it's off the shelves. They're no longer cracking eggs on their heads. No. If you purchase a new traditional policy, it includes more consumer protection, tax benefits, and even better pricing to prevent price hikes. Even better, a new type of policy was created called hybrids. Your premiums can't go up. You get benefits without submitting receipts, and even your family can get paid to care for you at home. And if you never need care, you can get your money back. Ask friends and family about their experiences about long-term care insurance, and you're likely to hear one of two stories. A bad one: I purchased long-term care insurance 20 years ago and they raised my annual premiums. I am so angry. Or a good one: I had long-term care insurance and it was amazing when I needed care. Most people don't use their long-term care benefits until 20 or 30 years after they buy a policy. With the improvements made, I think we're going to start hearing a lot more good stories in the years ahead. I'm Jesse, and this is Long-Term What? If this helped, share it with someone who needs it, like it so more people see it, and subscribe for more unboring long-term care tips. And if you're thinking about long-term care insurance, we sell policies from all the top insurers, and we'd be happy to help you find the right fit. For personalized quotes or to learn more, visit longtermwhat.com.